Hi, this is our presentation, the risk and return issues relating to SME capital raising through IPO. We are group member 25 and we have Li Yingnan, Dong Xuanyuan, Sheng Hantian, Wang Yunhan, and me. SMEs are the growth engine of the country, and we feel that this initiative, for example, SME IPO listing, will definitely help SMEs in reducing listing costs and raise capital in order to drive our country forward. In recent years, the micro, small, and medium enterprises sector has consistently registered a higher growth rate than the overall industrial sector. The major advantage of the micro, small, and medium enterprises sector is its employment potential and low capital cost. The sector employs an estimated 59.7 million people in 26.1 million enterprises. Labor intensity in the MSME sector is estimated to be nearly 4 times that of large enterprises. So please next our member.
What is the SME's potential for initial public offerings? It can be discussed in 3 parts. The first is SME with financials, such as a proven track record and a strong growth forecast. The second is SME with people, such as dynamic management and talent pool. And the third is SME with organization and business, such as market leader or large presence and innovative products.
Now I will start my part of the presentation, the benefits of the SME and IPO. This is the finding convenience, a cost to the capital and financing opportunity. When your companies go to the public, even a small companies, you can get large capitals. So because you will find a lot of inventors to put their money into your business. So even a small business company, they can do the largest business or make a largest product. The second one is currency value. Your companies go to the public will become the shares. The share will become the currency. Those currency can transfer between different companies. So you can use your share to buy the target companies. Improvement in credit rating. This one is when your companies go to the public, every information will go to the public. So such as your financing ratio and cash flow, balance sheet or income statement. Those important message will give to the inventors, so they have a strong belief they can get a lot of benefit from your companies. Increase the order book and improve the margin. When your company go to the public, lot of people will know your companies, so they will know what sale your company have and what service your company do. So this one will increase your sales, so increase your profit. Valuation. This when your company go to the public, so the investor will need to know how much value your companies have, or should they lend money to your companies. So this one will show their information as how much value your company have, so they can put their money into your business. Ultimate utilization of the capitals. So when you start a companies, the companies have small capitals. The capitals is the limited resource. So you can, when the companies go to the public, so you can get a large capital's return, and you will share your companies with other peoples and even domestic or internationals. So they will share your risk. So that's way you reduce your risk. So and reduce your debit. Stockholders confirm. This one is you give the information to the inventors, so they can know what company you're going, what's the company is going. So they will have the exactly information about your company do or your company future will do. Now, for the last one is like you keep your human resource into your country, into your companies, or get more human resource. So that's my part of
This part
presentation.
explains tax benefit of SME IPO. Favorable capital gain tax treatment. Listed shares held for more than 12 months and provided an investors has paid security transaction tax. As the promoters of SMEs has huge shareholding with them, they are going to be immensely benefited from taxation point of view by listing their company on SME exchange. Next part. No tax on equity infusion in the company. As per the Finance Act in year 2012, the company is liable to tax on equity infusion if the equity shares are issued to an investors other than a registered venture fund at a premium exceeding the fair price, whereas there is no such controls in case of listed companies, as the fair value is determined by market. No tax on distressed business purchase. As per the Income Tax Act, there lies a tax liability on the investor if the shares of an unlisted company are bought below its book net worth. The tax can be avoided on case of fair value determined through a stock exchange achieved. A stock exchange listing market the equation tax-freely in case of distressed business. No tax on buyback of shares. As per the elements in this year's annual budget, companies are subjected to tax 20% on buyback of shares. Such a tax is not applicable if the shares are listed. And there are also two benefits: wealth creation and governance. The first one is unlocking value. Value is often locked or not benchmarked for companies not on a trading platform. Companies listed on a trade exchange value platform for achieve fair value to their potential. The next part is portfolio building. Going for a public issue lends significantly visibility to the company. This typically results in diverse groups of investors, which in turn leads to the increased demand for the company's shares. The companies listed in the stock exchange get wide recognition and followed by investors and analysts at large. About governance internal system. Though the requirements for company listed on SME exchange are not as stringent, yet it is adequate to join up so to incentive the company for putting up internal control system and achieve sustainable benefits of better governance over long term.
Okay, now I will introduce the risk of SME IPO. SME are the growth engine of the country and we feel this initiative. SME IPO listing will definitely help SME in reduce listing costs and raise capital in order to drive our country forward. In recent years, the macro, small and medium enterprise sector has registered a higher growth rate than the overall industrial sector. The major advantage of the MSME sector is its employment potential at a low capital cost. The sector employs an estimated 16 million people in 26 million enterprises. Labor intensity in the MSME sector is estimated to be nearly 4 times that of large enterprises. Okay, what challenges of SME face in accessing public capital markets? For a viable public listing market, SME must want to list, and investors must want to invest. As in any marketplace, supply and demand must meet at an optimum point that deliver a low cost of capital to companies while being an attractive investment option for investors. Currently, the market is much smaller than it could be essentially, primarily because demand is too small. Since development of demand is more important than the development of supply, scarce resources and precious efforts should be allocated to the development of demand. There are 3 main obstacles that are suppressing investor demand. The first is small size of SME. The second is lack of liquidity, and the last is efficient prices discovery. Scale is the biggest obstacle facing SMEs when accessing the single capital market. Lack of demand, which is the bigger problem, is most rooted in the lack of investable scale, especially in terms of attracting pan-European investors. Due to their size, some SME can be attractive to domestic investors but not have a viable chance to attract the institutional investors that would be able to provide them a low cost of capital. Hence, the most promising option for the small SMEs is to be banded into groups to reach a viable scale. Institutional investors, which may find individual SME or funds of SMEs too small, might well invest in funds of SME. On the other hand, individual SMEs could be made more attractive to provide investors through other means such as appropriate incentives and regulation. Okay, the last is IPO cost. IPO cost going public requires the involvement of several service providers. Some of the fees related to this service are fixed and others are determined according to the amount of capital raised. The principal expense for SMEs IPO include audit and accounting fees, legal fees, underwriters fees, associated fees, regulatory fees, exchange listing fees, communication, marketing, and investor relation fees, printing public relations service fees, transfer agency fees, and market maker fees. None of the jurisdictions conduct a comprehensive study to identify the cost structure of SME IPOs. Some jurisdictions submit the overall cost, while others provide a breakdown of the cost derived from recent public offers, which may not reflect the exact IPO cost structure of their markets. Okay, that's all for our presentation. Thank you for your listening. Appreciate it.